This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Piers Ridyard. Piers is an entrepreneur and he is the CEO of Radix, which the company describes as the first layer 1 protocol built for DeFi. Now, before crypto, Piers worked at the JP Morgan bond desk, and he also launched Nifty, a device that increases available memory on Apple computers. Pretty cool. Hey, welcome to the show, Piers.
That's a really interesting combination of things to choose from my background. I would probably say like the more recent stuff is more relevant. I founded a Y Combinator company that built decentralized deal rooms for insurance companies and then sold that before joining Radix as CEO. I'd say that's probably more crypto and like more up to date. Nifty was a while ago, but it's fine. Investment banking was very short part of my life, also fine to mention, if you think that's more relevant for your audience.
No, Piers. Well, see, what's actually happening is because I'm actually an excellent researcher and podcast host. So, funnily enough, my next question would go something like, "Okay, so Piers, before we talk about Radix, let's get some more of your personal story." Now, I did mention Nifty. I understand that's a long time ago, though. You've actually been in crypto since around 2015. So, what I'd like you to actually do then, and you can start wherever you want, but why don't you pick up the story and just tell us a little bit about your personal journey, your crypto story, and how did that actually lead to Radix? And you can talk about Nifty if you want, or just leave it completely out, mate.
I apologize. I am dealing with a veteran pro. I didn't realize. I'm sorry. My crypto journey started in 2014, 2015 when my friend handed me the Ethereum white paper and asked me whether or not he thought he should invest in the Ethereum crowd sale before it went live. And I looked at it and looked at all the videos and stuff, and I was like, this sounds like this doesn't sound right at all. Like I'd say this is a scam. Don't buy. Fortunately, he forgave me, and when Ethereum went live, sort of shortly afterwards, he was like, "Let's start mining this." And I was like, "Okay, let's start mining this." And that was my cue to sort of jump into the Dagger Hashimoto hashing algorithm and worked out how this sort of stuff worked from like a computer level for like optimization of mining hardware, and started like just building and mining Ethereum. We were mining on the Genesis block of Ethereum, and we sort of mined it up until it was $2, and we're like, well, that's pretty good. Well, happy days. And then sort of started diving into the Ethereum community more, like going to the London meetups when it was like still 12 people, and there was like me and Paul and Stefan Toole and George and a few other people. And then as it grew bigger and bigger, just starting to get more serious about how you could actually build things on top of this. I think that mining, like in 2014, 2015, mining was the main thing that people cared about. And it was only when these ideas like that became sort of memes of the time of like decentralized autonomous organizations and what could be done with smart contracts started to sort of like really permeate into my imagination and what you could possibly build on these things. So I started actually thinking, well, maybe we could build something cool that would sort of help humanity. And so we started looking at things like decentralized crop insurance that would have automatic payouts based on the weather patterns over sort of like parts of Africa and stuff like that. We were like, this would be amazing. You could have like micro payments for crop insurance and it could pay out, and you could like get rid of so much of the sort of like the waste and the difficulty of buying it, and sort of real utopian view. But then there was no chain link, so there was no oracles and ways of getting data like that onto the ledger. There was no stable coins, so there was no way of stabilizing the way that you could do insurance payouts and like normalize your costs, and there was very few ways in which people could actually interact with Ethereum and get money into out of it, let alone be able to take payments from people who didn't really understand blockchain. And so there was all of this massive amount of cement like outpouring that needed to happen in the industry. So I started looking at, well, this is a really interesting technology. Maybe it's got some business applications, and that led me into sort of the traditional insurance sector and working out how you could take this sort of like very interesting set of ways of basically creating constraints about business rules that you could then apply to things like traditional insurance, where you'd have like a syndicated deal and you want to be able to split that 5 different ways and have the payments automatically go in the ways they're supposed to, as well as the disclosures and all this kind of stuff, which led me on to sort of build the first blockchain DLT company that I built, which was called Radix, which actually got into Y Combinator, and we went through Y Combinator and was subsequently sold. And it was at that point that I'd also started realizing that there was some real limitations to what Ethereum offered, beyond just the things of, there's a load of components that need to be here. There's also like, it fundamentally doesn't scale. It's got a pretty poor developer experience. It's really difficult to build secure applications. And like your time to market is really long with things like audits and stuff like that. And so Radix had been on my radar for a bit, but I'd sort of become very good friends with Dan, who is the CTO and founder, who'd sort of had this incredibly much longer journey in crypto than mine. And we became friends, and eventually I agreed to join Radix and as CEO and build that into the company it is today, and sort of really commercialize the tech that he developed.
Fantastic. And Piers, can you tell me then, at the beginning, when I suppose when Dan started thinking about Radix and then you joined him, what was the vision and the use cases that you were trying to target? Because this was, I guess, before the term DeFi as it exists now would have been around, right?
Yeah, absolutely. So Radix's foundation has always been around this concept of scalability, but like scalability is like this multi-headed problem. It's not just one thing that you need to be able to do with scalability, because the beauty of things like platforms like Ethereum isn't that you can have money, it's that you can create lots of different types of assets, and then you can program those assets. And so you need to be able to make things like logic statements about these assets, and then you need these, and now DeFi, the thing that's really getting the traction in DeFi is these decentralized autonomous applications, or dApps for short, being able to interact with each other. And so there's all of these like multifaceted problems. So like scalability problem in 2013, 2014 was just transactional scalability problem. The block size isn't big enough. We should increase the block size, and enter all of the Bitcoin drama that sort of ended up with Bitcoin Cash and Bitcoin SV and all of the other sort of like stuff that came out of that, and segregated witness and all that kind of stuff. And then Ethereum came along, and then crypto, and people are like, wow, we can build applications on this. So it's not just transactions, it's operations. It's actually running through sort of like code operations that I need to do as an execution within Solidity VM. And like now it's, well, the gas cost is going really high in 2017 because people are trying to get CryptoKitties. And so this was a user to application scalability problem. Like I as a user can't actually call these applications to do things because the gas cost is too high and there's too many operations that are trying to happen on the ledger. But it's a different type of scalability problem to what came before, which was just user-to-user transactions. And now DeFi is a new type of scalability problem, which is application-to-application transactions, like being able to interoperate between like compose together Aave and Uniswap and Compound and synthetics. And then that's creating a different type of congestion on the network again. And what Radix fundamentally always has been is a sort of back to fundamentals, like computer science approach to how do you create a decentralized application protocol that foresees the different ways in which you're going to need to scale applications on top of public ledgers in such a way that you can fundamentally solve all of these problems. You don't pick a problem and go, right, we're going to solve this problem. And like 2017 birthed like the problem of user to application scalability, birthed things like Polkadot and Cosmos and Near and Avalanche and things like that. But they're solving the problem that we had 3 years ago, because they didn't take a fundamental approach. They just went, well, we just need to improve this problem. And it's not that problem. It's a scalability problem at a much deeper level, which is and the problem can be stated. I have a program that I want to run on a set of computers, and that I have to not have a central intermediary to run this program, but I want to run a number of them at the same time. I want to be able to scale the number of programs I can be running, decentralized applications I can be running at the same time. And sometimes those applications are going to need to talk to each other. So what you need to be able to do is do this very complicated thing called state sharding. I need to be able to pass state between shards. And that was the fundamental thing that Radix really started with, very early on, was, well, if we're going to be scaling applications, we need to work out how we're going to make applications be able to scale and continuously be able to talk to each other in a synchronous fashion across all of these shards. And so that was the problem. That was the problem statement we started out with. How do you create true decentralized application ledger that scales in all the ways that you expect it to? So user to user, user to application, application to application. And we're just fortunate that DeFi, the product market fit that is being found in the public ledger space today, is of a type that application to application scalability is absolutely critical, and that our technology, because we sort of started from this very back to basics, very sort of fundamental computer science approach, actually solves the three sets of problems that you need to be able to solve to actually create full scalability of decentralized finance applications.
Okay, so a lot to kind of dig into there, Piers. So you're talking about working on two, or you actually said, three of the critical challenges with, I guess, blockchains or DeFi. But so the two biggest challenges at the moment are probably, scalability and security. But let's bring it back to, because I know that from the Radix product perspective, I guess, or you talk about two core innovations, right? So there's the consensus protocol and the Radix Engine. So why don't you don't need to sort of go too deep into the weeds, but maybe just cover off what you're doing with those two innovations and why you think they're innovative.
Sure. So the Radix protocol is a consensus protocol called Cerberus. Yeah. And it's called Cerberus after the three-headed dog from Greek mythology that guards the gates of the underworld. Nice. And is this sort of the idea being that it guards the consensus of the ledger. And it's a three-headed dog because it's a three-phase commit, which is just a technical sort of Byzantine fault-tolerant form of a consensus algorithm. But the key thing that Cerberus is doing is basically it parallelizes, I find this word hard to say, parallelizes or allows operations to run in parallel that are not related, but synchronizes on operations that are related. So if I have 5 different transactions going from five different shards on Radix, and they're all unrelated, then they can all start and end asynchronously. There's no need for them to be synchronized. So, simple example of this is I send some money from my wallet to my mother, and you send some money from your wallet to your mother. Those two things, they don't need to be. We don't need to absolutely order them versus each other. It doesn't matter whether or not my transaction strictly is written to the ledger before your transaction, or your transaction is strictly written to the ledger before my transaction, because they're not related. They have no dependencies to each other. But if I send a transaction from my wallet that needs to touch your wallet and another wallet, or let's say I need to send, let's take a real example. I want to do a flash loan from Aave, which is a lending protocol on Ethereum, and I want to borrow some wrapped Bitcoin so that I can do a trade on Uniswap for wrapped Ethereum to then pass that back into Aave to pay off my loan. But I want to be able to do that all in one transaction. That's a bunch of operations that are happening across multiple applications that need to all happen atomically, or none of them happen atomically, meaning they should all happen or it fails, right? And if one part of that fails, I don't want to end up holding the Bitcoin if the trade for Ethereum doesn't succeed. So what Cerberus does, which is unique in this consensus space, is it allows synchronicity between shards. So on Radix, we shard to achieve scalability in the same way that Ethereum 2.0 is thinking about sharding, in the same way that Avalanche shards, in the same way Hashgraph is sharding, in the same way that any Cosmos or Polkadot, they take a slightly different approach, but like it's fundamentally cut things up and put them in different places. But the unique thing about Cerberus is it allows you to say, right, these 5 shards, they need to be synchronous for this particular operation. So we need a way of being able to braid together, which is the terminology we use, braid together these transactions, these related operations that are happening on 5 different shards for this particular operation that has dependencies across shards, so that it can either succeed or fail atomically. And this is the key, because then what you get is the asynchronicity of sharding a execution layer, sharding your operations, sharding your applications, and sharding your transactions, while not losing that really important component of DeFi of, well, sometimes I need things to work all together all at the same time, and the only way that you're able to do that on something like Ethereum 2.0 is if they live on the same shard, which then fundamentally breaks the scalability model that exists there. So that's the core of what Cerberus delivers. And this is something that we've developed and then gone out and actually formally proven it with the University of California Davis blockchain research department. We went and did the mathematical proofs with them to make sure that Cerberus works in the way we expect it to and is able to do all of these like clever things. And then on the DeFi side, the Radix Engine, this is the next layer up. So if we're talking underpinning it, the consensus layer is your fundamental building block of like, is this operation allowed on Ledger? The next layer up is, well, how do you build the things that you want to? Like, how do you build your decentralized applications on top of this platform? And the Radix Engine, it like delivers 4 fundamentally important things for DeFi. The first is you mentioned it, we've already covered a lot, which is scalability. The second is you also mentioned, which is security, which I can talk about a bit. The third is making it easy to build secure applications quickly. And then the fourth point, and I think this is probably the most important, but you can't really understand the fourth point until you've gone through the other 3, is making sure that developers and the community are incentivized in the right way to build the things that are important to help people build applications on top of the platform. So the Radix Engine is a development environment and an execution environment. The Radix Engine V2 is where you have these things called components, and components are, you can think of them like smart contract snippets, right? So the way that you build on something like Ethereum is, when I build a smart contract, I have to bring all of the things into the smart contract that I need. So I have, for example, an ERC20 token on Ethereum is a large number, a surprisingly large number of lines of code, because Ethereum has no concept of what a token is. You have to create the concept of a token every time you create an ERC20 contract. So there's a lot more chance for errors, and the Solidity environment's very insecure for building, and this is why audits end up being really expensive and all that kind of stuff. On Radix, we take the Unix approach, which is like build things like snippets or applets that do one thing really well. So like this particular applet or snippet or component understands what it is to be a token. This particular component understands what it is to be a continuous to run a continuous function market maker function. And these are on Radix, they are finite state machines. So a finite state machine is something that essentially can only be in a certain number of states, which means that you have a lot less opportunity for there being errors. It's the kind of thing that you use in mission critical systems like flight control software or nuclear power stations or traffic light systems, anything like that, where you don't want to have coding bugs and errors, or you need very low bug environments. Use finite state machines to make sure that you can't end up in super states or weird states, which cause things like recursion errors, which is what the DAO hack was, or what actually, some of the more recent hacks have happened as well, have been around these like recursion errors that can occur on Solidity. So if you're a developer, you will understand the concept of Git or GitHub, and like using dependencies, like pulling in libraries and going. If you're a developer, you don't build things from scratch. You kind of build the glue that holds together all of the bits, all of the components and libraries that other people in the community have written to then build the things you want to. And on Radix, we take that one step further. We make these libraries into components that are highly secure, but they all exist on Ledger. And so now the Ledger contains all of these primitives that I can just pull. So instead of having to write from scratch every single decentralized finance application that I want to do, like you have to do on Ethereum for every single one that's being built, you instead have these mini components that are highly secure that I can then call and glue together to make a decentralized finance application. So what all of this does together is it makes it very secure, because you have much less ways in which the system can go wrong. It's very flexible, because it means developers don't have to worry about all of the dependencies that they're building into their virtual machine. Instead, you have these secure components that you're kind of calling, but you can see are already running well on Ledger and have been used by a multitude of other projects, and that allows you to essentially leverage what already exists, what the Ledger is understanding as primitives. And the third part of this is it allows you to build very, very quickly. You can come to market in much less time, because things like security audits, you can have a security audit on Ethereum that can be $1 million, which is insane. And the reason for that is because it's auditing massive amounts of code every single time is necessary to build a to build a decentralized finance application on top of Ethereum at the moment. All of that goes away, or a lot of that goes away with Radix, where you suddenly have a much smaller amount that you have to audit to make sure things like the glue works correctly. And the last part of this, the really important thing from the point of view of the way that communities build up, is that there's a royalty that comes from building components that are useful on Radix. So if you're a developer and you're like, man, I've got this really great idea for optimizing the way that a continuous function market maker works, or I've got this really great way of making this particular library 10 times faster or cost less money to call. If you create a component, all components are on Ledger native to the Radix platform. Once you create one and deploy it, if any other project comes along and uses those components, then you also receive a royalty every time that application is called. And so what you're creating here is this last bit we think is like a really important extra step to open source code development, which is you give the community who is building these components, these useful elements to making it possible and easy to build complicated decentralized finance applications. You give them a stake in the success of the applications that are built using those components that they've developed themselves, which we think is this like last missing link in creating the right incentives between the application project builders and the developer community, which is so essential for building the foundations of making it possible to build these decentralized finance applications in the first place.
Okay. Piers, so we've covered a lot of ground again here, and so in some ways, you've talked about Ethereum and some of the, I suppose you'd say, flaws or problematic parts of Ethereum, but the reality is that in DeFi right now, everything is built on Ethereum. And of course, one of the downsides to that is we've seen, the rising transaction loads and rising gas costs. that aside, the majority of developers are working on Ethereum. So I guess what I'm saying is, do you see yourself as Radix slotting into DeFi as it exists on Ethereum, or do you see yourself as a competitor to Ethereum? And if so, so you've talked about the developer royalty program, and a lot of blockchain projects have tried to do similar initiatives. And it's fine to kind of build these incentives in and try and attract community, but it's still that's a really hard thing to pull off in the real world, right?
Yeah, so really fair questions. I would say that this is entirely different to what has been previously tried. Like EOS spent $1 billion trying to create a developer community by paying developers to build on top of their platform. Hashgraph tried a similar thing. Algorand's trying a similar thing. Like, that's not what we're talking about here. We're talking about giving a community of people who build components that are useful to the community a stake in the success of the applications that subsequently use those components. Is fundamentally different from Radix as an entity going out and paying developers incentives. It's about creating the right environment for a incentive feedback loop between the application builders and the developers, not saying, as Radix, we're going to go out and pay people to build on top of our platform. That would be, I'd say that's actually really key difference. However, I take all the other points. I'm not going to just put those to one side. So Ethereum, like this bull run that we're in right now, is going to exist on Ethereum. Like DeFi is not going to suddenly move from Ethereum in the next 6 to 9 months, and that's because of the way in which we see traction build in decentralized finance. It builds on these 3 core pillars, which is access, liquidity, and choice. So the more people that can access a ledger with the assets they care about, the more assets you'll end up on that ledger, and the more users you'll end up. Then the more users and assets you have, the more liquidity you'll have around those assets, and the higher the transaction volume will be pushed. And the more those two things happen, the more people are incentivized to come and build on top of that ledger to take advantage of the users, the assets, and the liquidity. And then those new applications and services then attract new users. And this is what we call the DeFi cycle. And this is essentially what's happening on Ethereum today. And so we're not going, right, we want to beat Ethereum 1. The thing that's sort of coming down the road is there's this massive shift to Ethereum 2.0, which is obviously taking longer than they wish to. But Ethereum 2.0 fundamentally breaks a load of things that's really important in DeFi. One of these key things being atomic composability, and the Ethereum community itself, as in Vitalik and the Ethereum Foundation, is actively trying to distance itself from DeFi. It's going, look, we don't like DeFi that much. We don't think that DeFi is the killer application for blockchain. We'd rather it be other things. And Vitalik sort of said, look at all of these other projects that are non-DeFi. Let's focus on those. I think part of that is because fundamentally there is a knowledge that the way that Ethereum 2.0 is architected is going to create problems for DeFi directly. And part of it is, I think, because Ethereum's ambitions was never to be a single purpose ledger. It was always to be a general purpose ledger. I think that for us, there is these massive problems that we see in Ethereum every day, congestion being one of them, but smart contracts constantly getting hacked, or people losing money as a result. Yam.finance is a great example of that. 650 million flows in and then 3 days later flows out because of a bug in the code. People getting millions of dollars stolen on top of these ledgers. All of these kind of things. Oh, and audits costing multiples of the cost of development on top of these platforms. That hides a number of when a market is hot and a lot of money is flowing in, and it's relatively easy to raise capital, all of those things often end up being hidden as like structural problems with the platform because everyone's got this massive rush to move to a platform. But fundamentally, Ethereum is moving away from DeFi as a strategy from foundation down, both because of Ethereum 2.0 breaking fundamental parts of DeFi, and secondly because Solidity and the Solidity VM just isn't well suited for building financial applications. So our long-term view on this is like this is a marathon, not a sprint. We fundamentally believe that decentralized finance is going to long-term reshape the global economy and the way the financial system works. But that's a 20-30 year journey, and so instead we're taking the view that a true engineering approach to how you build the tools that are actually most applicable and most useful for building decentralized finance is the best approach to building those foundations that need to be built now. And then on the other side, I don't see Ethereum as a competitor. It's a place that we need to integrate well with. Like, so, we are releasing an ERC20 token, a Radix ERC20 token on Ethereum first to make sure that it's embedded in the DeFi ecosystem, to make sure it's embedded in the Ethereum ecosystem, and to create a really simple value bridge between Ethereum and Radix so that people can easily move value between Ethereum and Radix when the Radix ledger launches. We've also incubated a project called Stakehound, which is unlocking $25 billion of locked liquidity in that's currently locked in proof of stake on other ledgers, and first bringing that to the Ethereum DeFi community, but also allows you to move that liquidity between Ethereum and Radix. And for us, it's about making sure that there are really easy ways of moving between the ecosystems, moving liquidity and users and access between the ecosystems, and then creating a much better environment for building, deploying, and using decentralized finance that will in time allow people to easily move across. Like, we're not trying to say, Ethereum, you either it's Ethereum or us. We're just going, look, we're building this specifically for this application, and there's a lot of really good engineering reasons why you want to do that, and this is where it's hot right now, and we accept that. So we are going to make sure that it's easy to take advantage of both places, but long term you need a protocol that is specifically designed for this application, because ultimately finance in and itself is one of the deepest, most complicated industries in the world. And if you want to be properly addressing that market, you have to take a full stack approach to how you're doing that. You can't just say, oh, this is a general purpose thing that you can build anything on top of, because you'll just end up with bad user experiences and bad technical experiences and bad developer experiences that end up being expensive for everyone involved.
Really insightful thoughts there, Piers. So as we start to finish off on Radix then, so you mentioned the Radix token, which is an ERC20 at the moment. So just talk to me about the token and what the plan is there, because one of the token narrative in DeFi has really shifted this year, and now, especially with any new token, users are really wanting to see governance rights. They want to see shared revenue rights. They'd prefer not to see a pre-mine. They want to see some kind of fair allocation or distribution model. So in the context of that, talk to me about the Radix token, and then you mentioned the launch of your mainnet, I suppose. So, and maybe just paint a picture of what the near-term roadmap looks like.
Sure. So a lot of what is happening in DeFi right now with things like the governance tokens and stuff like that is a direct response to regulatory views on what constitutes a security or what doesn't constitute security. With regards to Radix is a pure utility token. It's not designed to have a passive income associated with it. It's not designed to give you a vote on being able to sort of take a share in fees or anything like that. It is fundamentally a layer one protocol, and its token economics have been built around the concept of a layer one protocol token economics, which is the same as what you look at when you think of Ethereum and something like that. And you don't want your token to end up being categorized as a security, because fundamentally it makes it less useful. It's difficult it then becomes more difficult for developers to be able to access it. It makes it more difficult for the everyday person to be able to access the tokens, to be able to use the utility of the platform, and it makes it harder to distribute the token for being able to do things like securing it via proof of stake. So we are not doing any of these sort of ways in which decentralized finance applications are building and deploying their governance token, because fundamentally it goes way too close to the wind as far as we're concerned with regards to regulatory rules around what category these tokens would fall into. And for our point of view, again, like this is about building a platform that can stand for 100 years and that anyone can be able to get the tokens and be able to use, which all of the things that are being done in the way that these governance tokens are being issued and deployed and circulated and traded put very much at risk. So yeah, like much more as you would expect, a classic distribution model, small allocation for the team, a much larger allocation for the community and for the people that can buy it in the public sale, in the private sale that we currently have going on, and then a sort of a distribution model that also supports a foundation which will become more and more decentralized over time to make sure that the custodianship of the public ledger is properly handed over to sort of the community that extracts value from it. I do like a lot of the ways in which these sort of like tokens are being built. These governance tokens are being built for the particular applications they are, like these decentralized finance applications. They are financial applications. There is an expectation of profit. There is an expectation of passive income and things like that. And those are absolutely right for the purpose that they're being built for, but would not be right for a layer 1 protocol to be building in that fashion. Our token is not yet live. Our token will be live in the middle of October. And if people are interested in being able to purchase it, then they can find out more on our website. But yeah, I'd say it's a tricky area to navigate. We've spent a long time on this, and ultimately that's where we've ended up.
Fantastic. Very nicely said and insightful again. Okay, well, Piers, let's go to a very quick break, and then when we come back, we'll finish on a lighter note. We'll have a bit of fun with the Crypto Conversation hot take round. Back in 1 second.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
All right, we're back, and I am with Piers Ridyard. Piers is the CEO of Radix, and he's done a very good job of explaining the Radix protocol and given us some very good thoughts on DeFi. But Piers, I like to finish each Crypto Conversation podcast with a quick round of rapid-fire Crypto Conversation hot takes. Are you up for it?
Absolutely. Hit me.
All right, I just want your hot takes, your hot fire. Take your best shot. Here we go, Piers. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I think that forking is a natural way in which communities can express their differences and move their views and develop. So, like, I like forks, but I still only buy Bitcoin. So like, I think that it's a great way of communities being able to essentially get rid of people that maybe they didn't get on with so well, and then move forwards more strongly as a more unified group in both camps. I haven't found anything that I like more than Bitcoin in all of the forks, so I still only buy Bitcoin. I don't know if that makes me a maximalist or not.
Hey, I don't know if it does either, but that is a good answer, and I very much agree. All right, well, Piers, what would you say is your firmest conviction, crypto or DeFi opinion?
That DeFi will have more liquidity than any other single exchange, including all of the centralized exchanges in the traditional market, in the next 10 years. So NASDAQ, LSE, any of those. Obviously, we're going to beat Binance, we're going to beat Huobi and all of those guys, but I think that DeFi, like the fundamental component that is just so exciting about DeFi, is the way in which liquidity is able to move between applications and competing products. And like, holy crap, I am so excited to see what the next 10 years bring in that.
Fantastic. Very bullish thoughts indeed, Piers. I like it. And look, we have seen, some of the volumes on DEXs at the moment are starting to catch up to some of the centralized crypto exchanges. So, the future looks very bright for DeFi. Switching gears just slightly, Piers. I do ask every guest this question. It's going to be a little bit of a crazy ride, but look, who do you think wins the American presidential election in a couple of months' time?
It's a really difficult question. I honestly don't know. I think that America has a lot of internal problems and struggles that it's kind of dealing with. I think that it's going through an identity crisis at the moment. I think that its position in the world from a geopolitical point of view is going to be challenged very soon by China, if not already. I think that all of this is sort of making people question what it is to be American, and what it is, like how they want their country to look or behave. And I think that Trump very much gets to the heart of what a lot of people think is the right door. Like, when people are scared, they lock their windows and they lock their doors, and I think that that's sort of what Trump sort of represents. Is like he's a bully boy in a bully pulpit that is presenting a strong image whilst protecting American interests, and that feels like a safe thing to do in the way that the world is progressing at the moment. And I don't think Biden does. But Trump's obviously demonstrated himself to be incompetent in so many different ways. But I still think like there's like almost that thing that people will forgive people when they're in times of crisis for themselves, or where they don't know what they want or whatever. Like that they'll often want to stand behind someone that they see as being strong. So I think that Trump has actually a pretty good chance of winning a second term, and I think that that's just what's happening in America right now is sort of playing into that desire for strength that Biden isn't showing.
Yes, look, interesting thoughts there, Piers. It's just a volatile time in human history, and look, we'll be all eyes on America for the rest of this year. I think we'll just have to see how that plays out. But look, let's switch gears again. He is an American though, but Bill Gates, he famously said, Piers, that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So you sort of hinted at this before, but what do you think the blockchain space looks like in 10 years' time?
I mentioned this earlier in the podcast, like cement pouring. It takes a surprising amount of time to lay the foundations to do things easily, but as soon as you've got to the point where you can, like I was talking about, 2015, I wanted to build insurance on blockchain and I couldn't. I could today. That was 5 years later, but actually all of the things that I was envisioning back then are now being built, which is super exciting. So it's that cement pouring, and we're getting to the point where I think there's been a couple of inflection points. DeFi was one of them. I think the next set is probably going to be like being able to move more traditional finance products across to public ledger, and at that inflection point, like you just get an exponent is great because it just big numbers become big very quickly, but they look small at the start. Like you sort of look how an exponent goes, you're like, oh, small number, but it suddenly shoots up this hockey stick. So that's why I'm super bullish on liquidity on top of ledgers, because I think that the DeFi will dwarf the traditional finance world or subsume it in large part because of that huge liquidity opportunity. That essentially that's what capital markets are all about, is about allocating capital, and DeFi is able to do that in a way that central markets just can't.
And look on a similar note, Piers, William Gibson, famous sci-fi author, he said that the future is already here, it's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
I mean, does it have to be crypto?
No, it certainly does not.
I mean, like everything that Elon Musk is
Fantastic.
doing. Like everything that Elon Musk is doing. I read this fascinating article, I think it was on Wait But Why or something like that, about the way that Elon Musk thinks.
That is a brilliant series of articles, yes.
Yeah, and just this way of going, well, you know, exploring the art of the possible is the art of what is actually presently the state of the art, and most people's view of the state of the art is actually out of date as to what the state of the art is right now. And so I think, you know, things like Neuralink, things like electric cars, which are feeling normal now, things like being able to send rockets to space, things like you know, being able to have a global internet, mining asteroids, all of that kind of stuff. I think Elon Musk has been incredibly good at combining the ability to demonstrate that the future is now and also market that very, very well. And so I think most of his stuff is a really good way of pointing to it, but there's lots of stuff that is less well marketed that I think is also exciting as well.
Yeah, no, I love that answer though. Elon Musk is certainly pioneering the future on many different fronts. Let's zoom out slightly though, Piers. Time to get a little bit weird. We're almost done, but what do you see as the long-term future for the human race? Do you see dystopia or utopia?
I actually have a very specific view on this. I think that it always comes back down to the question of like, what is the purpose of the human race? And I think that if we like this, I'm not sure if it's utopian or dystopian, but it's just, I think self-perpetuation is one of the core overriding purposes of the human race. And so like that's going to happen. So we just have to choose what type of future in which self-perpetuation is able to be continued. And I think if we, you know, all come together as humanity and sort of say, look, self-perpetuation is the purpose of the human race, like killing the environment's probably not a good idea or a good part of that. Like overusing of resources is probably not a good idea or a good part of that. Polluting is probably not a good idea or a good part of that. So I think that with that lens as a collective, self-perpetuation as the ultimate goal of the human race, you can sort of take this very long-term view of like how do you make sure that actually is protected for as long as possible. I don't know if that's utopian or dystopian. I would hope that it is at least balanced in its view, where you don't eat resources too quickly. You look after you know, sort of the future as far as you can see it, and you work out things like Elon Musk is doing with like building a backup for humanity in Mars and stuff like that. I think that's all part of that narrative and that view. I would like to think that it is more utopian than dystopian, because if you're suddenly going, well, purpose is self-perpetuation and we all live those lives in the ultimate end goal of actually achieving that, we should at least want those lives to be long and happy rather than brief and suffering hardship. So I think that there's an element to that I think can also bring sort of like some guidance. But the thing is that I have this conversation with other people, and it depends if you're an optimist or you're a pessimist, or indeed, you know, sort of like you like taking an argument to the nth degree, which is like, well, why don't we just like have two humans and just clone them, like, and that achieves the end. So like, I haven't perfectly thought this through, but I think that's probably, for me, that's the future of the human race, is finding some sort of purpose that everyone rallies around, and then finding balance in how we then manage humanity as a whole.
Very nicely said again, Piers, and I think that's right. And look, there's not really, it's always a pendulum swing between heading towards utopia and dystopia, and then, the cycle always reverses. And I think that's just kind of the cycle of life. But sure, humanity is definitely, we do like to perpetuate ourselves. So we'll just have to see how this plays out. But we're all part of it. And this kind of leads me to my final question, Piers. We finish off and we say, finally, what is your favourite science fiction book, film, show, or universe?
Great question. The book that most grabbed me and kept me was Rendezvous with Rama by Arthur C. Clarke. And it's a short book, but not so short that I basically started reading it on the toilet at 10 p.m. and then didn't get off the toilet until 4 a.m. when I'd finished the book. I love this wonderful sort of like story arc of humans, of a sort of far future of humanity having colonized our near planet, this alien spaceship entering our solar system, and like everyone believing that they're going to be attacking, or that they're going to be trying to take our resources or something, and actually the alien spaceship just like flying past, just being like, we care, it's so insignificant, this isn't even part of our journey, we're gone. Like, they just come in and leave. And I just love that idea of like the human concept of superiority or importance, and it just being completely demolished by this sort of like wonderful world in which he creates this instance in time of a spaceship going towards its destination that isn't anything to do with humanity. I also really like the Foundation series. I think that's a great set of books.
Of course, well, superb. Arthur C. Clarke is he's a titan of science fiction, and I'll make sure that there's a link in the show notes to that book. Look, Piers, this has been a lot of fun. Thank you very much for talking to me today. There's really nothing else to say except to hand the microphone back to you again and just tell the people where they can go if they want to find you on your various platforms, and where they can go to really dig into Radix and what you guys are building.
Absolutely, thank you. So our website is Radix DLT, so RADIX, DLT standing for Decentralized Ledger Technology, DLT.com, so radixdlt.com. On there, you will find our DeFi white paper, our economics white paper, and our consensus white paper. You can also go to our blog, which is radixdlt.com/blog, to find a load of musings about what we think is coming down the future for DeFi, what we think is important about the industry today. You can follow us on Twitter. We're at RadixDLT. You can come and join us on Telegram, where we've got a pretty active community, which is Radix_DLT on Telegram. And obviously you can message us, email us at hello@radixdlt.com. We love hearing from people, and we'd love to sort of hear your thoughts and whatever that you want to find out more about Radix. Please do reach out to us. And last thing is, on our website you'll also find a Get Tokens button where you can register to find out more about buying the Radix token.
Brilliant. Hey, thank you very much, Piers. All the best to you and the team.
Thank you very much for having me, Andy.